Yeah. So what did you discover?
Yeah, so basically how it works is that you have your two legs. There is a leg that makes you money, and there is a leg where you lose money. And at the end, normally, your long leg should make you more than what you lose on the short leg.
Correct.
Okay. So now, what if you see that the trade is going in the direction that you want, and you are like, okay, I want to cut my short leg. Is it possible to do that?
It is possible to do that.
Is it dangerous to do that?
It is the worst idea you can ever do this year.
And why?
Or even next year. It was a bad idea last year as well. Are you seeing where I'm going with this?
Yeah, it means that it's something that we should never, never think about.
Do not do it.
Okay.
Do not do it. If you want to close the trade, the position for profit, go ahead and close both legs and take the profit that you have at that time. Just last week, was it maybe the week ago? I had a student, won't name any names, and they tried to do that. So I'm going to ask on a debit spread, if you pay 150 for it, what is your max loss?
150.
$150. The student broke those legs and the price moved away from them. In the few seconds that they were there, they could not close both legs quickly enough. They ended up losing $1,100 and something.
In the live account? Or...
Yes. This is on a spread where the maximum loss is supposed to be 150. Wow. Don't try to close the legs one at a time. It's not designed to be in your favor. Just lose the 150 if that's what it comes to. It's not much, right? Considering that you could lose possibly, and that was on a good slide. He got a break. He could have lost maybe even $2,000-3,000.
SPX?
It was SPX, yes.
Wow.
So actually, it doesn't even really matter what security that you're trading. When the minute that you break those legs, then it is no longer a debit spread, right? And of course, you can't close the long leg before you close the short leg. Theoretically, because if you close the long leg, you would be short one leg, in which case that would be considered a naked, whatever it is. Whether it's a put debit spread or call debit spread. If it was a call debit spread to begin with, then that would be a naked call. All right. If it was a put debit spread, that would be a naked put. Don't do that. Bad idea. So I see where you're going. Surprisingly, in SIM, it will let you do that. Right? But in SIM, there is no margin requirements, no margin maintenance requirement, I should say. And you can do a lot of wrong things in SIM. So no, don't practice such a bad move.
I did not practice it. I just wondered if it was possible to.
Oh, yeah, you can stop wondering today. So, but I'm glad you brought it up, because if it ever crossed your mind to take one leg out at a time, and in some schools, in some places, I've heard even really bad advice that, close your losing leg. That's a really bad idea. Really bad idea. Ask people who've been trading for 50 years. Once they wake up from the floor after they're done laughing at you, then they'll tell you no. So don't do it.
Okay.
Cool.
Okay. So that was my question.
All right. Cool.